Answer: hey there everyone, Iggy the Investing Iguana here. Today, we're taking a deep dive into the world of Keppel DC Reit, one of Singapore's leading data center-focused real estate investment trusts. In this video, I'll walk you through their latest financial results for the first half of 2024, highlight some key strategic moves, and share insights from top analysts to help you make sense of it all. Whether you're a seasoned investor or just starting to explore the world of REITs, you won't want to miss this. H1 2024 Financial Highlights. First, let's break down the numbers. For the 6 months ended June 30th, 2024, Keppel DC Reit reported A. Distribution per unit, DPU, of 4.549 cents, a 9.9% drop from the same period last year. B. Distributable income of 80.9 million Singapore dollars, down 11.4% year-on-year. C. Revenue of 157.2 million Singapore dollars, up 11.9% from H1 2023. D. Net property income of 132.6 million Singapore dollars, a 4.2% increase. Now, I know what you're thinking, the nearly 10% fall in DPU doesn't exactly scream good news. But hold your horses, there's more to the story. The REIT manager attributed this mainly to loss allowances for their data centers in Guangdong, China, higher finance costs, and the impact of foreign currency depreciation against the Singapore dollar. On the bright side, Keppel DC Reit received a cool 13.3 million Singapore dollar settlement sum related to a dispute with DXC Technology Services. They also secured positive rental reversions and escalations, which helped boost their top line. In fact, they achieved a whopping 40% positive reversion for a major renewal contract in Singapore's co-location market. Not too shabby. Portfolio updates. As of June 30th, 2024, Keppel DC Reit's portfolio occupancy stood at a healthy 97.5%. The weighted average lease expiry, WALE, was 6.4 years by lettable area, providing good visibility for future income streams. Interestingly, the WALE by rental income was shorter at 4.1 years. Why the difference, you ask? Well, the REIT manager explained that a higher proportion of their rental income comes from co-location assets, which typically have shorter lease terms compared to fully fitted or shell and core data centers. It's all about the tenant mix, folks. Strategic moves. Now, let's talk about some of the exciting moves Keppel DC Reit has been making. In July 2024, they made their maiden acquisition in Japan, the second largest data center market in Asia. They snapped up Tokyo Data Center 1, a freehold property with about 190,166 square feet of net lettable area, for 23.4 billion yen, around 201 million Singapore dollars. This strategic acquisition was fully funded by JPY-denominated debt at a cost of below 2% and is expected to be DPU accretive by 1.1%. Talk about a savvy move. But wait, there's more. Keppel DC Reit also divested IntelliCentre campus in Sydney, Australia for 174 million Australian dollars. That's a mind-blowing 150% premium over what they originally paid for it. Can you say ka-ching? The proceeds from this divestment were then used to repay about 58.5 million Singapore dollars in loans and other borrowings. As a result, Keppel DC Reit's aggregate leverage ratio improved to 35.8% as of June 2024, compared to 37.6% just 3 months prior. This gives them some extra breathing room for future growth opportunities. Analyst insights. So, what are the experts saying about Keppel DC Reit? Let's take a look at some recent analyst reports. UOB Kay Hian Research maintained a hold rating on the stock, with a target price of 1 Singapore dollar and 98 cents based on their dividend discount model. They highlighted Keppel DC Reit's maiden foray into Japan as a positive move, establishing a foothold in a market where major U.S. hyperscalers are investing heavily. Meanwhile, the average target price from a consensus of analysts sits at around 1 Singapore dollar and 91 cents, with a mix of buy, hold, and sell ratings. The highest target is 2 Singapore dollars and 20 cents, while the lowest is 1 Singapore dollar and 65 cents. As of July 28, 2024, Keppel DC Reit's unit price closed at 1 Singapore dollar and 91 cents. So, depending on which analyst you ask, the stock could be fairly valued, slightly undervalued, or even overvalued. As always, it's crucial to do your own research and consider your personal investment goals and risk tolerance before making any decisions. Looking ahead. So, what's on the horizon for Keppel DC Reit? The REIT manager expects demand for data centers to continue growing, fueled by the rising adoption of artificial intelligence and ongoing investments from institutional players. With its diversified portfolio of quality data center assets spanning key markets like Singapore, Australia, Japan, and Europe, Keppel DC Reit seems well-positioned to capitalize on these trends. The recent acquisitions and divestments also showcase their ability to seize opportunities and recycle capital effectively. Of course, there are risks to keep in mind, such as the potential impact of rising interest rates on financing costs and any slowdown in the global economy. But overall, Keppel DC Reit's focus on the resilient data center sector, diversified portfolio, and proactive asset and capital management strategies appear to be serving them well. Wrapping up. All right, let's recap. Keppel DC Reit delivered a mixed bag of results for the first half of 2024, with a drop in DPU offset by strong organic growth and strategic portfolio moves. Analysts have varying opinions on the stock's valuation, but the consensus seems to be that the REIT is well-positioned for the future, given its exposure to the growing data center industry and diversified portfolio. As always, remember to do your own due diligence before making any investment decisions. Consider your personal financial goals, risk appetite, and time horizon, and never invest more than you can afford to lose. If you found this analysis helpful, be sure to smash that like button and subscribe to the Investing Iguana channel for more insights on REITs, stocks, and all things investing. And if you have any questions or topics you'd like me to cover in future videos, leave them in the comments below. Thanks for watching, and until next time, happy investing.